Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/The Smattering, to get access to the 10 best stocks to buy right now. For just about every asset class, 2022 has been one of the worst years on record. And there's lots of people right now that are trying to figure out, is this a good time to be investing? Should I be looking at buying stocks right now? I'm Jason Hall. This is The Smattering. I'm here with Jeff Santoro. Jeff and I are going to answer that question right now. Hey, Jeff.
Hey, Jason. Before we dive in, I want to remind everyone that if they're enjoying our content, please subscribe to our YouTube channel and also check out our podcast called The Smattering. You can find it on any podcast app. So, Jason, it is tough times out there, but there are plenty of good companies, and we think these three might be a great place to start for investors here, even in a bad 2022.
Yeah, let's start with Starbucks. This is a simple business to understand, has some really good real economic moats, competitive advantages that are hard to break. And in the case of Starbucks, it has really powerful brand power, and it has a tremendous opportunity to continue growing its business. It just reported earnings recently. The market didn't completely love what it said, but there were some great things. It continues to grow revenue. It continues to grow sales with its most loyal customers. And the product that it sells is very, very high margin. It's coffee. The brand is the thing that drives it, keeps people loyal, and it's able to get great operating margins as a result of the scale of its business. Jeff, I want to show a chart here because I think this chart is really, really valuable to explain why right now could be a very good time to consider buying Starbucks. So what you see on the screen here, the purple line is Starbucks' stock price off of the prior high price, okay? And the yellow is the S&P 500 off of the prior high price. I'm going to overlay one thing here. I'm going to overlay recessions. So you'll be able to see some periods, right? So 2000, we had the dot-com crash, the recession that followed 9/11. We have the global financial crisis. We have the pandemic, the coronavirus pandemic, and then we have today. What I want to point out is, again, Starbucks has fallen more than the market a ton of times in the past, okay? And what we know is that because of the performance of that business over time, every single one of those times that the stock has fallen more than the market, it has turned into a great buying opportunity. Jeff, I think that's really important right now because the stock has fallen, because the market is down, because investors are afraid about the global economy. It's not down because Starbucks is in a whole lot of trouble. I'm going to flip this chart here, and I want to show you, again, over those periods where the stock was crushed, you know, when it fell more than 30%, let's count them, 1, 2, 3, 4, 5, 6, 7, 8 times that the stock fell more than 30%. Look at this. The financial crisis, it fell almost 80%. Over that period, investors who were able to hold through the craziness and add in those opportunities have earned amazing returns owning Starbucks, Jeff. I think this is definitely one that should be at the front. Jeff, the next stock that I want to talk about is Alphabet. And what I'm showing here is Alphabet's total returns since the beginning of 2005, which is right after it went public. Jeff, what is there to tell these wonderful people about Alphabet?
Also a market beater for over the long term. And I have a feeling it had the same sort of reaction to downturns as Starbucks did.
Yeah, here you go. Maybe even more so. And I want to point out this one, Jeff, it is down even more, down 44% from the recent high. You want to tell the folks why Alphabet, again, this is YouTube, Google parent company, why is it down so much right now?
It's down so much because the advertising business is taking a hit, right? So that's affecting ads served on the platform. And it's also taking a hit because so has every tech stock over the past 2 years.
Yeah, I think that's a key thing, right? So the market is down on tech right now. And the key, again, this is a stock that's down substantially, largely because of near-term concerns. Again, the macro pressures are there. The ad business is in kind of a weird, weak part of the cycle. But again, this is a business that we've seen over time, does really, really well. And I think it's trading for a great valuation. Another reasonably safe stock with a really strong moat that I think is a great one for investors to start with. Jeff?
Yeah, and I think much like Starbucks, the moat is a big component of why it's a good investment almost at any time, right? Like when you go to search for something, you're going to Google. When you want to see a video, you're going to YouTube. When you want to get coffee, a lot of people are going to Starbucks, and there's an enormous opportunity overseas. So both of the companies have those similarities as well as their market performance similarities.
Let's shift gears a little bit, Jeff. I want to talk about Berkshire Hathaway is my third pick. And I'm going to share that same chart, that percentage off of highs. This is for the Berkshire B shares that first were created back in the mid-1990s. Again, this is a stock, besides during that dot-com boom, when Berkshire stock fell sharply while all the tech stocks were going up, this is a stock that historically generally doesn't fall as much as the market most of the time when we have a market downturn. And I think that's interesting because, Jeff, again, it's another one that's been a long-term market beater, right? It generates wonderful economic returns. But I think this is a good one for investors who are looking for a stock that maybe isn't as volatile, one that's not going to be as up and down, but still has a long history of beating the market, Jeff.
Right. And like you pointed out, the downturns aren't as bad with a company like Berkshire Hathaway, but the returns aren't quite as good as you got with Starbucks and with Google over the long term. But that's sort of what you want for a company like Berkshire. They're supposed to be the ballast in your portfolio, the thing that helps you sleep at night. So you get that lack of volatility on both sides. It still is a market beater, not as much, but it's also not as much of a market a loser when times are tough.
Okay, everybody, there you have it. Jeff, I think you and I agree. You and I, we've been speaking not just with our words on the show, but you and I have been talking about the fact that we've both been active buyers of stocks over the past several months. We think it's a great time to be buying. If you're trying to get started, again, Starbucks, Alphabet, Berkshire Hathaway, those are our three picks right now of great stocks to get started with.